ADA has been doing very well recently, and with that, people are starting to come back into the Cardano ecosystem. They're starting to put their money into the DeFi aspects of the ecosystem and trying to move ADA into Cardano native tokens that we talk about on this channel all the time. One of the ones that people will probably be looking into is INDY. Now, this is the token for the Indigo Protocol, and today we're going to highlight what is going on with the Indigo Protocol. Do I think this is a good investment? Where can price potentially go? And we're going to look at just everything about it. We're going to analyze this from top to bottom as I do before I make an investment. I'm not currently invested in the Indigo Protocol, and by the end of this video, you will see kind of my reasons why. But Indigo is the most dominant synthetics protocol on Cardano. Currently, it has a monopoly on synthetics. It has a moat around the business. And let's just figure out if this is a good investment for you, okay? In order to figure that out for myself, I look at fundamentals, I look at tokenomics, I look at charts. And it's not just one thing that makes up the analysis, it's everything as a package. And so, I always say before you invest into something, you really need to know your why. What are you trying to get out of it? What does this project serve you? And hopefully we can answer that today in this video for you. We're going to look at this that I've created, this PowerPoint, this presentation. We're going to look at the Indigo Protocol itself. Here's the dashboard of the D app where you can go in and mint these collateralized depositions. And then, of course, everyone's favorite, we got to do some chart analysis. See, is right now down here an optimal time to buy for the best percentage return or to kind of meet your goals? Now, to start it out, the first thing that we want to do for the Indigo Protocol is fundamental analysis. And what I mean by fundamental analysis is basically in these questions here. But basically, we want to look at what does the project do? Is the project live? Is it working? Has the team been around? Has the project been around a while? Is it iterating on its success? Is it using funds appropriately? Is it doing all the things that it needs to do to be a good business? Is it a good business? And that's a question that we want to ask. In my opinion, I'm going to go ahead and say Indigo is a good business. They just did a version 2 of the protocol, restructuring like everything, fees and ratios and all this. That's going to make the protocol infinitely better, helping assets to stay to their respected value they're supposed to be in the Oracle. And then assets like IUSD are actually maintaining their peg now with the restructuring. So these are all the things that we want to look at before even considering making an investment. So Indigo Protocol, to just TLDR it, is a synthetics protocol on Cardano. It's the best synthetics protocol on Cardano. And basically this means that you can take your ADA, put it into a smart contract on the platform, and mint out other tokens. And so far on Indigo, other tokens that you can mint are Solana, Bitcoin, Ethereum, and USD. Now, this is very beneficial for people who want to maybe trade their ADA at different points in time. Maybe at the top of the cycle, they want to trade ADA for Bitcoin or trade ADA for dollars. With synthetic positions, with collateralized depositions, you have the ability to do this in a non-custodial fashion, in a way where it's not dealing with markets on DEXs and swapping and trading, but you are doing it directly in a smart contract where you have more ability to kind of control when you get in and out of the position, or what different ratios you want in the collateralized deposition. Okay. Some other things before we get into the version 2 upgrade. Indigo has great governance. We're going to look at that. And one of these tabs here, this is their governance website or governance blog. And you can see when they were going to make the version 2 upgrade, they just have tons of temperature check, tons of ideas. And so the one thing that really does stand out about the Indigo Protocol is their governance system. So if you have INDY, you get to be a part of the governance, you get to mold the project. With the version 2 upgrade, this was very, very important for Indigo stakers and Indigo holders to be able to vote and position this. And in the future, they will have the ability to change fees in order to allocate more revenue to themselves or earn revenue on different fees collected. So if you're into that kind of stuff, that's very, very important. But let's get into the version 2 upgrade. This is the most recent thing that happened on Indigo in 2024, version 2 upgrade, and it introduced 4 new things: a maintenance ratio, redemption margin ratio, interest mechanism, and fee restructuring. Now, these 4 things are actually really important because it's changing the way that the Indigo Protocol works. With these 4 new things coming into the version 2 upgrade, assets have the ability to maintain their peg easier, and then the protocol is going to make more money by distributing fees across multiple types of people using the platform and not just having fees for people opening collateralized depositions, okay? So that is this part, the fee restructuring here. Interest mechanism is like the way that you're going to pay interest on the platform. It says it right here. The introduction of an interest rate on all CDPs is a change for version 2. So every CDP is going to have a new type of interest rate depending on a dynamically adjusted interest rate, per I asset. So whether, they want more USD to be minted, want more Bitcoin to be minted, et cetera, interest rates are going to change on a CDP basis where they were not happening previously. So that'll have a dynamic effect on what I assets are minting or how much of it's being minted. So they have more control. The redemption margin ratio actually helps bring more I assets back to the Indigo platform. And by bringing it back to the platform, what we mean is when you go on here into the Indigo platform and you go to redemption, you can click, let's see, you can go to the Simpler Pro, you can click any of these I assets that they have. Let's say we want to do I Bitcoin or I Ethereum, right? You can click on here. Come on, buddy, load. Click here. And then you can you can go on to like Dex Hunter or something like that and say, I have, a half an ETH, right? I have a half an ETH. And it will start to tell you how much you can earn in ADA by bringing half of an iETH back to INDY. So you can go on something like MinSwap or Dex Hunter and see what is the price of iETH on those DEXs, what is the amount of ADA that Indigo is willing to give you when you return iETH, and if the price is more for an Indigo iETH, they give you more ADA back, it's more advantageous and there's arbitrage solutions to bring iETH from DEXs back to the Indigo protocol and returning it to the protocol. When you return it to the protocol, you earn some money. Some fees get shifted to like the DAO or to the stakers, and then less I assets are out there minted, which helps bring the peg back to the value it should be and helps maintain the I asset peg by having less debt on the total I asset. Lastly, this maintenance ratio is another ratio that is going to help keep I assets healthier, keep things closer to their peg. And basically it says right here that you have a limit, like on your collateralized debt position, you have to have a certain amount of threshold before you can mint more I assets. Before you can change the CDP, you have to put enough of the collateral back in there and maintain a certain health factor before you can start to adjust things again. So we all know, like when you take a collateralized debt position, you can take like 70% out or 50% out in order to have a certain health ratio. Well, unless you bring that ratio back up and meet the maintenance ratio, you won't be able to adjust your collateralized debt position. So this just incentivizes people to not have so much debt on I assets, not have such risky things and not have to do so many liquidations, right? That's what the whole version 2 is really about, keeping the Indigo protocol healthier. And I think that this is a great thing. It's been working all of 2024, and we actually can see I assets like IUSD getting back to their peg. Let me show you real quick. This is IUSD versus the dollar. And you can see right here in late 2023, early 2024, IUSD was having trouble staying to a $1 peg because of how much debt was in the system. As these upgrades have worked into the system and the fees and the debt and all this has kind of worked itself up, we see Indigo getting back to $1. We see the IUSD I asset getting back to $1, and hopefully it can maintain this dollar ratio. It's not worth having IUSD if it's not going to maintain $1. And with these new fees, Indigo has implemented new ratios and new things. I assets have the ability to maintain their peg a little bit better. Okay. Let's compare this to the version 1 real quick. I think I got it right here somewhere. Version 1 right here was actually just putting 2% fees onto the collateralized debt position. So when you minted a collateralized debt position, 2% of that was the fee, and that was going to INDY stakers or the treasury and stuff like that. There was also a 2% liquidation fee. What's happening now with the version 2 fees is that we are spreading fees across multiple different people. So some people come into Indigo just to stake. Some are liquidating. Some are, minting collateralized debt positions. And what this new version allows is for everyone in the Indigo ecosystem to contribute to revenue for the protocol. It's actually only a 0.5% fee to open a collateralized debt position now, where previously in version 1, it was 2% to open a CDP. So by lowering the fee on CDPs, you're actually going to get more CDPs minted, and then all of these other fees help to continue to bring revenue to the protocols. Like now, Stakers have to do stuff with stability pools. They have to pay a fee. Redemption has to pay a fee. Liquidation still pays a 2%, and then we have interest mechanisms. But this type of fee structure is actually much better for the Indigo Protocol, which is already the best synthetics protocol on Cardano. This structure is going to help it maintain better I assets, better revenue, better for stakers, better for treasury, better for governance, better for the whole protocol itself. So the fundamentals are getting there. They are there. This is one of the biggest projects on Cardano. We can even look at this by TVL, Indigo Protocol TVL. We can see what kind of total value lock the Indigo Protocol has compared to other projects on Cardano. Let's see if we got Cardano here. Cardano here. Look at this. Indigo Protocol is actually third now, not number one anymore, but it has $83.5 million in total value locked. This is up 162% over 1 month. And so the Indigo Protocol is doing really interesting things, and it's doing it really well. This is the only synthetics protocol you can use really on Cardano. A lot of good things of staking, trading, IASA minting, and synthetics on Cardano. So in my opinion, the fundamentals are there. Do I think the fundamentals are perfect? Not 100% perfect, but the fundamentals are there for a good project. And Indigo is doing great things on Cardano, having more ability for people to use their ADA in good DeFi analysis ways. You can take loans, you can long things, you can short things, right? All of that because of what INDY is providing to the Cardano ecosystem. So fundamental wise, the Indigo protocol is there, the INDY token is there, and there are good reasons to use the INDY token, okay? After fundamentals, so we know Indigo has passed this fundamental check. It has a good reason to be around. It does good things. What are the tokenomics, right? Because we're going to hold this token, and what are we getting out of it, or what is the purpose of holding it? The first thing that we want to do is look at the distribution of tokens. Who's getting tokens? What is happening with the tokens? And you can see here that Indigo Protocol didn't really ever... The only way to get tokens was by participating on the platform. This helped drive their user base up. This helped drive functionality and testing of the protocol. 54% is going to DAO rewards. 13% going to DAO treasury. 5% to governance participation. Basically, are you voting? 1% in their protocol owned liquidity, which is kind of like their loans or their money. 1% to an airdrop to get things started, and then 25% to the team. Now, I think this is good. I think these tokenomics are good as more of these DAO rewards and DAO treasury get leaked into the ecosystem. DAO rewards are basically public funds. It's going to bleed out into the people as people use INDY and kind of help support the platform. They're going to get these rewards. And so this is basically public money. The thing is, we just needed to bleed out into the public in order for the 54% to be controlled by the public. With good tokenomics, I think you want half of the token supply given to the public so that the public can make good market decisions. They can help find an accurate price. They can help find an accurate market direction. They can help find the current trend of where the token's going. And so these tokenomics are good. The distribution's good enough, I would say. It's good enough to have about half of this going to the public, and then over time, the treasury is going to go out to the public, governance participation to the public, 1% airdrop to the public. So the tokenomic structure and distribution are there. It's not like 25% is going to the team, 25% is going to a VC, 25% is going to the rewards, and then 25% is going to marketing, right? So these are good tokenomics. It seems that the token is vesting over about 5-ish years, they've said on their governance or on their documentation. And so we got to get 100% of these tokens out over 5 years. I think the token was released in late 2022. We can check here. Yeah, November 2022, I think, was when the token was really launched out and started. So 5 years from that, we got 23, 24, 25, 26, 2027, late 2027, early 2028, you could expect all of the tokens to be out. And it seems that if you kind of take the current circulating supply divided by the total supply, that they are inflating the token anywhere from 2 to 5 million INDY a year, like basically releasing 2 to 5 million of the current tokenomics up here out to the public every year in order to hit that 100% goal over 5 years. We can look at these on tab tools, but the current market cap is about 35 million. Fully diluted market cap is at 81 million. Circulating supply is 15. Total supply is 35 million. And you can see how, over the next 3-ish years, in order to get from 15 million to 35 million, we're going to have to release 5+ million tokens a year, or however many they're releasing on a yearly basis. Okay. We can check this data over here on Tap Tools as well. Let's look at this from a USD perspective. Indigo's got a $40 million market cap. It's up a little bit actually since I made that slideshow. It's got 9,000 holders. More holders is always good because more people are controlling the price action and price direction. And then you see the circulating supply is about half. And that's that liquidity that they're trying to release. I think on a long term, releasing more liquidity will affect holders, right? The market cap will continue to grow even if price doesn't grow as more tokens are released. So that's always something that you want to watch out for. If you're only planning to hold Indigo for the next 6 months, price inflation is not going to, or circulating supply inflation is not going to affect your price targets as much. But when you hold for more than a year, you do have to start worrying about inflation. Let's change this back to an ADA chart now. And yeah, you can see this, but tokenomics, I think the tokenomics are good enough. I think the fundamentals are good. What the use case that the project provides is good. I think the tokenomics of kind of how they're structuring this and kind of the what is going on tokenomically about where the market cap is and where it can go and what the circulating supply is. I think you got to worry a little bit about that token inflation, but overall, like if you're going to buy INDY, you need to participate on the platform, you need to stake on the platform, and you need to earn some of these rewards, right? You need to do things to get some more INDY in order to keep up with that inflation. That's the one thing I would say about the tokenomics. The final thing with any tokenomics that you want to look at is the utility of the token. And the utility of the INDY token really ties back into staking, or, well, two things, governance and staking. You can see right here on the Indigo DAO, this section here is basically everything that you're going to be able to do with the Indigo token as a holder. So not only are you buying it to kind of get price appreciation, but you're doing it to, obviously you get to governance, you get to vote based on how much INDY you have and kind of push proposals in certain directions for the platform. That's a big deal. The next thing you get to do is Indigo staking. Now, stakers are going to receive some type of reward from fees generated on the platform. Their stakers help support the liquidity on the protocol. They help support the pools. They help support a lot of things happening. And so with that, if you have INDY, you get to stake it to these positions. And you can see currently the HRA, which what do they consider this is? Historical return annualized. Okay, how much money you're going to get on an annual basis. Currently, it is 23%. So when you're taking INDY, part of the token utility is you get to govern on the protocol, but you also get to take your INDY, stake it to the platform, and have the ability to earn 23% year over year on average, or this is the current rate. You get the ability to earn more INDY that we talked about. That's right here in the DAO rewards section, kind of. You get to earn more INDY from your INDY by staking it. So two things going on with token utility, governance of the protocol, and then you also get to earn rewards as the protocol starts to earn rewards. And I think, in my opinion, what would happen is as these DAO rewards are kind of fully fledged out, or as the protocol fully kind of fleshes out all the tokens, as more fees are accumulated, stakers are going to continue to earn the fees over the lifetime of the protocol. After all the tokens are released, the protocol is obviously going to earn revenue, and then stakers should earn portions of that revenue. So that's going to be the last piece of token utility that they have. So we got fundamentals, we got tokenomics. Fundamentals are good. The use case that they're providing is good. I think that they can add more I assets. I think that that would be a beneficial thing for the Indigo protocol because, like on LenFi, we have all of the tokens in the Cardano ecosystem. On Liquid, they have a majority of the tokens on the Cardano ecosystem. And so I think Indigo, in order to have a massive amount of synthetics dominance or to get more people using the platform, they need to figure out what I assets people want to use more. And so they should expand to have, they have iBitcoin, iETH, iUSD. Maybe they need iEuro or iJPY so we can get a foreign exchange market going. Or maybe they need, they have iSolana, maybe they need iAVAX or iXRP or iUSDC, all these different options of I assets you can have on Cardano in order to make the synthetics protocol more usable or get more people using this platform. The more options they have, the more ability they might use it. And so I think it's a very easy way to get more users on the platform because I don't think that it would be very hard to continuously just make new I assets because they already have these 4 I assets here. So iBitcoin, iSol, iUSD, iEthereum. I think you should try and get, 20 or 30 gray I assets on there. But fundamentals otherwise are good. They're trying to peg I assets like iUSD more with these version 2 upgrades. They are iterating. One great thing is that you can see that the team is iterating year over year, getting better and better. And so for me, that means the protocol is going to continuously get better over time. That's a great fundamental thing. If a new synthetics protocol like Butane gets their mainnet together and releases it, INDY might have some competition. But right now, they have no competition in the synthetic space, so they do have dominance of the market. The tokenomics are also good. Supply is releasing, so if you're going to hold more than 6 months or a year, you got to worry about that. But there's no major venture capital dumping on you. There's no major team dumping on you. Just liquidity is coming out through rewards and through the DAO. And so that's the one thing you got to watch out for. But the token supply, the token market cap is all in relatively good position. So last thing we want to do is look at the chart of this platform. What is going on with price and where do we think it can kind of go? Like, what's the price prediction? Okay. So what I see here today is a couple things. One, I kind of drew in here. Let me just clean this up a little bit. Let me show you a little bit what I got going on here. So this is the INDY to ADA chart, INDY valued in ADA. And I think this is the way you want to look at it. You don't want to look at it on a USD chart, but what is INDY doing in terms of ADA? Is it going up against ADA? Is it going down against ADA? A few things point out to me. Okay, I got a couple resistance bands, this kind of pocket, and then our current low that INDY was just rejected off of, this kind of low resistance band. A couple things I got going on here. In order to look at the chart, I think the first thing you want to do is look at the price and the trend and the history. So the first thing I see is that INDY is going down. It's been going down, and it's probably due to more supply being released over the bear market or over 2023 and 2024. Obviously, these times, not a lot of users are going to be around. Not a lot of people are using protocols. Not a lot of people are buying up, Cardano native assets, Cardano altcoins. And so price is going to go down as more tokens are released. That's kind of what happens. INDY was hit particularly hard by this, and you can see this with this massive downwards trend we have. We can see price coming back, but it has not really confirmed that upwards trend, in my opinion, which is a little bit of not a red flag, but it's just like, you really have to believe in this if you're going to buy it before it kind of starts to make its way back up. I got 3 pockets of resistance INDY has got to get through in order to get back to all-time high. It's got this current one it's bouncing off of here at around 3.2 ADA. It's got another pocket around here around 6 ADA, and it's got another pocket at around 9.5 to 10 ADA. It's really hard to tell if it's going to get all the way up here, but these are my zones of resistance that I have. It has almost no support. The support would be down here at around 1 ADA, 1.15 ADA. So this is what I see in the price and the history and the trend. There's not a lot of history to go off of, but price has been depressed for a while. And, I think it's going to be hard for it to get all the way back up just because of how far it's come down. Second, we want to add oscillators, moving averages. And we got these 2 right here. The orange ones are 20-week simple moving average. Blue is the 50-week simple moving average. And then light blue is the 100-week simple moving average. And I think this is a good sign. INDY is getting above the 20-week moving average, and you want it to stay above. If you're looking at buying INDY, I would say you want to keep INDY above the 20-week moving average, and you want it to cross this 20 and this 50 and start to come up and come up and come up, right? That would be good for price. So if you're interested in INDY, watch out for that. The last thing that you want to do is come in here and figure out what kind of momentum do we have. And you can do this by looking at RSIs and MACD. And when you zoom out far enough, these things are all very simple and very easy to continue to do. But we got 2 good things going in our momentum oscillators here. The weekly RSI is trending upwards and is showing that price and momentum is moving upwards. We also see the same thing with the MACD. And as the MACD crosses this 0 line here, it's going to get even more bullish. So we have a lot of reason to believe that price is going to continue to go up for the INDY token. We don't really know how high it's going to go, but we know that the trend is upwards, right? We have a lot of indicators showing that 1, the bottom could be in right here at around this 1 ADA level. 2, RSI momentum's upwards, MACD momentum's upwards, and then INDY is starting to overtake these moving averages. If it can maintain the moving averages, get above this resistance, get above the 50-week moving average. These are all better and better signs building a case. Now, obviously, if you want the most gains, you have to invest now before kind of these things happen and kind of make a case why you think it does happen instead of like waiting till it's way up here at around 5 or 6 ADA, right? If you want to make more money, you have to take more risks like that. But I do think that the Indigo price is going to continue to go up. So in my opinion, price trajectory is upwards. And I think if you bought it today, you will make money over 2025. But where do I think the ultimate price prediction is going? Can the Indigo Protocol 100x? Now, I will say, I think it's going to be a little bit hard for it to 100x, although it could possibly 100x, depending on how much you kind of believe it, how much you kind of think about it. The reason I personally don't think it's going to 100x is because when I compare Indigo and its chart and its protocol compared to other lending protocols on Cardano, I just don't think it is the number one lending protocol. It has a lot of TVL, it has a lot of synthetic use case, but I think what's really interesting is how it just doesn't have as many I assets. It doesn't, it's a very complex system. And then the chart like this does not scream full out bullish sentiment, right? Like this chart has just unfortunately been beaten down a little bit. And we can compare it kind of to the LQ chart, which has also been beaten down a little bit as price has continued to or as tokens have continued to be released. We already saw that Liquid has more total value locked than Indigo now. LendFi, another lending protocol on Cardano, in my opinion, has a better chart structure. And so when we're looking at price, when we're trying to see where price is going, I think something like this has a better opportunity for gains because of this obvious price structure that is being held over 2 or 3 years, right? LQ, I wouldn't really buy this because of how price is acting. And then INDY, unfortunately, is also kind of having this same price. And so if I'm going to bet on one thing to 100x, in my opinion, it would be LendFi. But if we're looking at INDY and if you are invested in INDY, the way that I would see where Indigo price can go is just based on the support and resistance. I think this area could be a good spot for it, kind of around 9 to 10 ADA. I think that would be a good spot for the INDY price to go to because they have released more rewards over time. Now, with the market cap only being around, what is it today, 40 million? I mean, it could 10x and get up to 400 million, and then it could 100x and get to 4 billion. I think that's just a little bit high for the protocol. We can double check this here. Yeah, $40 million is the current market cap. So if it were to 100x, that would put it at $4 billion with a fully diluted value of, 100 million, 1 billion, $10 billion. I think that's just a little bit high, a $10 billion fully diluted market cap if it were to 100x. And so I would say it could probably do like half of that or a little bit less. And so at $2, going up to 20 would be your 100x. Going up to 10 would be kind of your next leg. And so if we put it at around a 500%, that's around 14 or 15, kind of gets you back to that all-time high region. That's kind of where I would target on this INDY protocol, somewhere around like 10, 12, 14, if I were going to buy it. We can also do something like a trend-based Fibonacci extension, take the bottom here, take the top, take the bottom again, and see what kind of numbers it gives us. Let's clear this out a little bit. Boom, boom. And when we do this, we kind of get an expectation of where the Fibonacci say that price can go. Some things you get here is a 1.618 at about 18, a 2.618 at about 30. Unfortunately, though, I personally just don't think that these are very realistic numbers for the Indigo protocol for a couple of reasons. One, it's continuing to release liquidity. Market cap is growing as price is staying the same. Then, I think the use case of INDY is just a little bit smaller than traditional lending, right? People want traditional. You have to argue, why would somebody want a CDP over, a loan that they can get on Liquid or LendFi, right? Because on those platforms, you can get things like iBitcoin or iETH or iUSD. Then, the last thing that you would want to argue is, based on the chart structure, why would this be a better chart structure to invest in than something like this, right? And so these are just things I think about and things that I think would hinder INDY from going 100x. But in my opinion, if you were to buy INDY today, I think you should target around the 10 ADA level. Fundamentally, Indigo is a good protocol doing good things for Cardano, having collateralized deposition, having synthetics, and bringing it to Cardano. These are perfectly awesome, amazing things. You can mint Ethereum, you can mint Bitcoin, you can mint Solana. all on the Cardano blockchain because of Indigo. And no other lending protocol like LendFi or Liquid, and no other DEX like MinSwap, DEX Hunter, SundaySwap would be able to use Bitcoin, Ethereum, Solana if it were not for Indigo Synthetics minting those assets on Cardano. So this is a fundamental use case Cardano needs. There is a lot of reason for Indigo to be around. Tokenomics are good. These are decent tokenomics for normal retail investors to have a good advantage, right? The team is not controlling a bunch of things. Venture capital is not controlling a bunch of things. Tokens are slowly being released out to the public, and we got about 50% of the circulating supply out there. So price is able to be found by retail participants in the ecosystem. Lastly, there is ample room on the chart for Indigo to go up. The big thing you want to see is what is happening with price today. Is it going to maintain the moving averages and keep going upwards, or is it going to be rejected and break below the 20-week again? These are major decisions. If Indigo or if the Indy token cannot overtake the 50-week moving average, it's going to be in a lot of trouble. Do I think it can 100x realistically? No, I think the market cap is just a little bit too big, and I think the market cap will continue to grow as tokens are released out in the circulating supply. But I do think that you can get a decent return, a great return on the Indigo token against ADA. And so the big thing about this is that I think, you can target maybe like a 200 to 300, 400% return against ADA, but ADA is also going to return against the dollar. So probably Indigo to a dollar. You could probably get something like, what is this? 5, 10, maybe like a 10x in total, something like that. But I do think that a target would be around here, around this 7, 8, 10 ADA level. I wouldn't really try and expect to get something crazy like 20 ADA. I just don't think it's in the card for the Indigo protocol, but I do think good returns can be had, and you get a lot from the Indigo protocol. You can stake your INDY, you can vote on governance, and as you stake that INDY, you earn more INDY, so you don't need as much of a percent return because of how much INDY you're earning, 23% year over year, okay? That's what I think about the Indigo protocol. That's my honest review. I think if I were to go take a loan on Cardano, though, I would probably do it on like LendFi or LQ. I don't see, in my opinion, the need to open a collateralized deposition and maintain that collateralized deposition. I think that there would probably just be an easier method for me to do it just on like a lending protocol. So that's my 2 cents. This is what I think about the Indigo protocol. Love to hear your comments down in the description, or if you have any questions, let us know. Other than that, hope you enjoyed the video. See you in the next one.